Hey traders, Todd here. Welcome to the Wednesday webinar. Sorry for being late. Just a nice little fire drill. We're trying to bring in our head FX and crypto analyst, just testing out a little bit with his audio, but we're good. So hey, welcome everyone. It's Wednesday, April 17th, and we have a bit of a quiet market here. We've got some updates on the wave counts. Let's see. We'll show you what's going on with the broader markets. I've got my team, Terry and Alex, and I'm going to bring them in here in a second. But let me just make sure we are live. And my team, my team just hit me on Slack and just let me know we're good. Let's see. Nice attendance. And make sure everything is rolling. Okay. Perfect. I see some people in here. Okay, great. So guys, hey, welcome. What's going on? So I shaved. We're leaving for Florida in about 4 hours. Taking the family down. No big deal. Just get away for about a week. I don't think I'm going to be computerless. I'm going to keep in touch. There will be no Wednesday webinar next week. So the Wednesday live stream. So from there, to kind of get that base tan going, I had to knock the beard back. So let's see. Position. Let me just work this here real quick. Multi-view. All right, let me flip this over. I don't know what I'm doing right now. So I told my wife I was gonna stick with this one right here, and she said no. She cut that one down, so we're not going to go with that one. But anyways, you got to get the base tan, right, Terry? You got to get the...
That's the Hulk Hogan look there.
Well, it's funny.
Yeah, I agree. If you're going to go get out and to get a bunch of sun, you don't want half your face to be white when you eventually shave. You'll never shave.
I made that mistake once in college, and you shave, and that's no good. And it's funny, my buddies... we have a group text going on, and they say, Todd, you look like Freddie Mercury from Queen. I was trying to go for the Flash Gordon thing, so I texted Sam Jones and I said, I just texted him, have you ever met Freddie Mercury? Because Freddie Mercury did the soundtrack. Queen did the soundtrack for Flash Gordon, the movie. Flash, da-da. Yeah. I mean, you got to assume he met him. I mean, how cool is that? Especially after the Bohemian Rhapsody movie that came out. I mean, just goes to show what an amazing... Were you into Queen, Terry, or no?
Oh, yeah, absolutely.
Okay.
I probably know every word to Bohemian Rhapsody. So...
Maybe we'll get you to sing that on one Wednesday webinar. Anyways, hey guys, good morning. As you can tell, it's a little informal here this morning. I think it's an informal kind of market. Terry Long here, Director of Research. You pretty much do everything here at Trading Analysis. He's a wonderful guy. My members have really gotten to know him over the last couple of years, and in the public eye, we're bringing Terry more out into the public domain. So he's great, wonderful at Elliott, got a good eye on the markets, and he's really my tech go-to, former Exxon
I try to help people out with Motive Wave, and when they're having trade, questions about their trades, things that I can answer, not necessarily take a little bit of load off of you. So, I help out wherever I can.
Appreciate that very much. So let's, we're going to bring Alex in here just a couple minutes. Let me just flip this over, get this ugly shot off the screen. Obviously, we shaved. All right, so a couple things here to start. I'm coming in with a little bit of an earnings trade. It looks like I'm going to get a hole or two in my body on another hole, which is fine. A little Netflix. It did a little plus and minus one standard deviation. Netflix earnings trade. I just kind of a fun little trade to put on. Basically, if you look at the Netflix expected move into earnings, it was 22. I think it was $23 higher or lower from yesterday's close. So if you take that $23 on top of the 360 close, you get 383 top side and call it 337 and change. So I did a plus and minus one standard deviation on these. As of now, it doesn't look like this trade is going to work. I think it kind of goes to show that I like to have a good wave count coming into earnings to have an idea of where the chart where the market might go. Netflix, tell me if you disagree. Netflix has been a mess. It's terrible. I was kind of thinking we'd get a move up and out of the range, but with all this Disney streaming news, nobody knows what to do with the stock. We're pretty well locked from 380 down to 330. I was gonna kind of say I'd be shocked if we stay within that range coming out of the earnings. These options expire tomorrow. Friday is closed in the market, so we'll see. I've got until tomorrow, but I don't know. I hate to start the Wednesday webinar with this, but what this wave count is here, there's several possibilities. I'm not really sure. So, Terry, do you have any input on this or no?
I know last year in April, guys, excuse my clock running there. So every hour on the hour. Yeah, last year I know we pinned this sucker last April, I think, when earnings came out, and we picked, but I think we've also missed it. And so your idea of going either side of it was when we had less conviction that we actually knew the direction was the move going to go up or down.
Right.
So yeah, you can get bit if you think it's going up and you only pick a move that is going to work one way or the other. I mean, it's almost a gamble on some of these earnings plays because you have such short time to react to them.
Yeah, it definitely is a gamble, and the thought in my mind here is, what exactly is this structure? We've gone sideways, and as you could tell, I had the idea that we might be in a completed wave one with some kind of wave two correction going here. I'm not exactly too happy about this count, so I'm considering that wave four would continue on, and we are still in a correction. That's why it's so important to get the higher time frame opinion. The wave four that I have this squared up with is wave two from 2015 into 16. So, we could be consolidating a little bit more before Netflix continues higher. But I would say, all in all, with all the Disney news that's been thrown at it, it's, from a technical point of view, it's weathered the storm quite well. It's weathered the mouse quite well. Disney is on a break. It's amazing. This guy has been, the mouse has been caught since 2015. I do have us as completed fourth wave. I was looking at 1-2. We have the trade on in our portfolio, but not on the options side. Let's just take a look at that. Let's go over here, monitor trade to DIS. Of course, this is the little portfolio, the $100,000 portfolio that we are tracking. I do have a 2.5%, maybe 3% allocation of the portfolio to Disney, so that guy is looking just fine. From an Elliott wave point of view, we always want to find guys that you can get 5 waves inside of 3. Okay, your Elliott wave model is going to show you that there are 3 trend waves and 2 corrective waves. You always want to make sure you can count that 5 wave move inside of 3, and that's where you never want to see the overlap of 4v2 right here. So 4 cannot go in the territory of 2. So my point on that is, for wave 3, I think we still have that 4th wave subdivision correction to come that should stay out of wave 2. So right now, you can't chase it because I think we're at a rather extended fib projection. But pulling back in 4, I think is going to be a very nice trade for us, Terry. And we might be able to move on up to get 5 of 3 eventually that takes us towards 150 in Disney. But I think we're going to have to be patient on that entry.
Yeah, I agree with that. I think we waited so long for it to break out of the consolidation. There's no hurry, rush to judgment. It's not going to be the only opportunity to trade this. Once it started this impulsive move upwards, that's going to run for a while.
Yeah,
and we'll be able to put several trades in Disney if we choose over the next year or so.
Yep, I absolutely think so. All right, perfect. Good one there. Let's see. I'm just reading. Yeah, so the other thing that's happening is we're seeing a rotation back into the banks. And I like who brought up Bank of America there. Lucas, good call. You know, these banks are driving me nuts. Let's get off the screen for a sec. You know, you get a Fed that says, oh, we're raising rates. We're on autopilot. We're going to scale back the size of the balance sheet. Rates are going up. No problem. Banks rally. Then you get a Fed that came back and said, oh, cancel that. We're completely dovish now. We're not raising rates for the rest of the year. And then the banks sell off. And now look at what's happening. We've got evidence. The bonds are selling off. Gold is acting weak. I took a shot in gold on the short side, but we're starting to see evidence again of a hawkish position from the central bank. JP Morgan came out. We caught that earnings trade. We had that. It was a call debit spread that was left for dead, but it came ripping back. Elliott Wave International is doing a marketing piece for us now, and actually was just released. Jeff Kennedy and I were working on that one. But the banks are starting to act strong here. So you have JP Morgan also coming out of consolidation that's been in place since 2018, and you have evidence that we not kind of similar to the Disney pattern, you might have a break. It's not the same duration of correction as Disney, but if this is in fact a third wave, you would expect that 100% relationship of...
Hey, Todd.
Yeah. Oh, thank you very much.
You're not sharing your chart there.
Okay. See why he's my technical director? So for JP Morgan, back to what we're saying here. Sorry, guys. 2018 consolidation, and we just finally are starting to show life here with this earnings gap. We thought the correction was over back here. We put a debit spread on. It was pretty much left for dead. But then the Elliott Wave correction evolved into a nice flat. So now we've got the flat correction. We rallied up. Earnings came out. And if this is truly a third wave, you'd expect to get at least to the net percent distance traveled of 1, which would be 113, or even the green fib up here, which is at 123. That's 161%. So the banks are starting to show signs of life, but it's few and far between. There's some strong ones and there's some weak ones. So JP Morgan is something we're definitely looking to kind of I'd like to take us up to the 120 area here. If the market can stabilize in the face of bonds that I think are at resistance. If we take a look at the 30-year bond here, I've been tracking this very simple elementary 5-wave move. We've backed away, and it looks like we should be able to test the area of the prior fourth in bonds. If bonds are going to drop, yields are going to move up. That's going to spell strength in the financials. So that's going to be the immediate downside target in the 30-year bond. And related to that, gold and bonds often trade in the same direction for the same fundamental macro reasons. I can't get this massive triangle out of my head in the gold market. Okay.
Now, gold's been such a laggard for such a long time. Big dog, as some of our members tell Alex and I when we're talking about the gold on Forex. So,
yeah, it's interesting here. Primary account, I've been tracking this account for a couple of years, was just a big, nasty triangle in gold. We have evidence that the E wave of B triangle, and the B triangle is just simply a 5-wave swing, lower highs, higher lows, is complete. We went right into the ideal fib projection, and we've begun to break support. Now, if we get inside of this pattern that's traced out inside of the E of B position, it's kind of a fun little double head and shoulders. We've been laughing with our members. You've got a left shoulder one, left shoulder two, head, right shoulder one, right shoulder two. We just broke down, and that's pretty interesting right there that we've begun to break down. So if gold's breaking down, that could indicate a hawkish Fed. If bonds are breaking down, that could indicate a hawkish Fed. It could also indicate a risk-on scenario. Can the market handle another threat of interest rate increases from the Fed? That's what this market is trading like. I don't think too many people are talking about it, but as I said, the Fed went from hawkish to dovish, and I think they're going back to hawkish. How can they not with the stock market 50 points from an all-time high? It's crazy. It's nuts. So, anyways, I'm setting up macro. Usually we start out each session with the S&P. And Terry, interrupt me. Jump in if there's anything you want to add, of course.
Well, the only thing I was going to say to the end of that is uncertainty drives volatility. So if we get back into an uncertain market, then look out.
Great point there. Yeah, that'd be good. All right, so let's just take a look at the markets. We'll take a look at the S&P here, then I'll bring in Alex. We'll talk about some Forex and some crypto. Terry, while I'm working here in the background, and also, hey, Brian, awesome. Thanks for the heads up. I'm just keeping an eye on everyone's questions as well. Are we rolling a GoToWebinar to do screen share, Terry? Are we up? Go to.
Yeah, you want me or Alex?
Oh, I think since we're on the macro theme, let's get Alex queued up here, and
okay.
And I'm just logging in over here. Start my meeting.
All right, we made Alex the presenter. He can get his screen pulled up there.
All right, perfect. Well, that's happening. Let me just show you where we are in the S&P here, guys. It's interesting, as I mentioned, we're stone's throw away from the old high here, and the best count that I have, this has been my count for months, is that we are rallying in C of a triangle. Okay, the C wave should unfold in 5 waves, and the way that I'm looking at it right now is we are in the midst of a 3rd wave. Okay, the reason I'm a little hesitant, as I discussed with members last night, is you can count on smaller time frames, or even if I zoom in on the daily, you could see a good 5-wave structure inside of 3. Remember, you want to be able to count 5 waves inside of 3. If you go down one smaller degree, and I can hotkey it very easily with my software here, you can see a 5-wave completion. I'm a little hesitant to call this complete because you'll notice this 100% fib projection. Again, distance traveled in wave 1, projected up from the end of 2, is equal at 2924. Usually wave 3s are longer than wave 1.
What we could be looking at is the decomposition inside of that wave 3, another wave 3 forming. So another 1, 2, 1, 2.
It could.
And then we could push the green 3 higher. But right now, we'll take it one step at a time.
We could, but what why I'm okay with that, Terry, is because the higher degree move is a C, and if
that's our ultimate target.
Yeah, it's conveying a theme of an ending diagonal. It's not tracing a diagonal yet, but if wave 1 wants to be the longest, wave 3 wants to be the middle length, and wave 5 perhaps wants to be the shortest, that's suggesting the same theme as a ending diagonal, which each subsequent impulsive move, or motive wave, I should say, is getting weaker. And a correction.
Yeah, and that's very possible.
That's possible. So it just makes it so much more peculiar that we're up against the old high. Old high is 2940. We're at 2907. We're 40 points from the all-time high in the S&P. So what can happen up here? I don't know, guys. I have no problem telling you I don't know. I'm happy I'm going on vacation. Terry and Alex, you guys figure it out. It's tricky.
That's a big resistance zone. That's a heavy resistance zone breaking previous highs, and it's rarely done the first time without a couple of retests. So
yep,
you break through it, and then you got to come back, and then you got to challenge it as a new support line. So we'll see how it goes.
yep. And I would say, where'd my wave 4 go? I think even if this is the completion of a wave 4 and we are in a new trend wave, I think there is so little chance of an outright breakout from these highs. I don't think, to Terry's point, we're just going to go parabolic without wave 2 as the alternate count. Okay, I do think we're going to need a wave 2 correction. I don't think we're going to get through the highs without at least a 5 or 8% correction, maybe 10% correction in wave 2. I do think it's coming, even if the coast is clear. So maybe it's that sign that the gold market and the bond market's trying to convey that Fed's getting hawkish. We're going to go through another Federal Reserve temper tantrum with the markets facing higher interest rates. We shall see. But what that does to the currency market, I'm very, very interested to know. Alex runs our cryptocurrency side along with Terry. He also does our foreign exchange side. The guys have been busy. Let me bring Alex in. Has he been on the show before, Terry?
No, this is Alex's premiere, his debut.
Wow. Alex, before I bring you in, move your camera just a little bit to your right. Perfect. A little bit more. All right. And can you point it up a little bit? I see half your face. You had it perfect.
Is it okay now?
It's beautiful. What's up, buddy?
Hey, this is not my first time.
It's not? You've been on the Wednesday show? Okay.
Yeah, I was once. I think 2 months ago.
Oh, okay. Sorry. Welcome
I don't
back
think we had a camera on him, though.
Oh, that's right. Welcome back to the show.
Yeah, we had a picture. Yeah.
Hey, listen, Alex, we had some audio issues, so he's using a secondary microphone. It's a little echoey. In the future, when the show actually becomes production quality and planned out, we'll have him dialed in. But Alex and I have a good history. I've known Alex for over 10 years. I've been out to visit him twice in Belgrade, Serbia. He put on some great Elliott Wave seminars and asked for me to come out, and I met a bunch of great people. Alex is an institutional, former institutional FX trader, very good Elliottian. He advises big corporates on foreign exchange direction using Elliott Wave. He's very good on the fundamental side. So I'm happy to have you, Alex. I'm happy to call you a friend for 10 years, and thanks for all your great work.
Yeah, thanks, Todd. I mean, you were the responsible man to transfer me the Elliott Wave back, and since then I'm just glued to my screen. So you're definitely guilty. I'm last 14 years glued to screens.
Talk about your passion for Elliott Wave a little bit. Just why does it get you out of bed or keep you from going to bed at all hours? Alex has got the best work ethic I've ever seen in the Elliott Wave world.
In general, while I was exploring for the methodology which I'm going to use in analyzing markets, I came across, actually we have a boat, unfortunately he's not with us anymore, acquaintance which point me out to your work while you were in FX game.
Yep.
And then I was immediately hooked and studied all of the mathematical ratios. I'm kind of a mad geek. And then I started to explore your work, and I remember my first chart when we get in contact while we were arranging your first visit here in Serbia. And I hope I can find it one day. But when there was impulsive wave, I was putting letters, and there was corrective, I was putting numbers. That was my first Elliott wave.
But you know what?
And then,
Everyone starts somewhere. Everyone starts somewhere.
yeah. But then, since then, last 10 years or 12 years, I'm very much engaged in and progressing all the time of adding all of the necessities for this complex methodology, and it's really so wide, and it encompasses also the social mood and markets. I love it. It's
That's
really
awesome.
my love, and
Awesome.
I love it as much as you do. So
You certainly do. You certainly do. Well, that's great. And I messed up. I mean, Alex, as you can tell, he's very passionate. He's very good at the Elliott Wave principle. I have his title mislabeled. He's not a founder, but that's fine. You know, we're all family. Doesn't matter. We got to come up with a title for you, Alex. But anyways, so that's great. So let's get into some markets here a little bit. We're gonna test our skills on the technology side. Can you guys both hear me? Okay, still.
Just fine.
All right, beautiful. So, Alex, I'm going to show Alex's screen here. He's going to drive. Alex, you're going to talk to us a little bit about what's going on in the U.S. dollar based on what we were just talking about with bonds and with the gold market, right?
sure. We have this dollar index here. It's a 180-minute chart. So what we are tracking here is a long consolidation, which actually has been trying to resolve itself for August 2018. So it's a long, drawn-out market, and I think we are very soon nearing the completion, either to the downside or to the upside. You can count this in several ways. So we have a 5 waves up, and here we have an A, B, C, D, E, which is basically finished. And after that, we have a nice 5 waves up, and I think it's complex corrective pullback, maybe with one more move lower, and then we can rip higher in a third, fourth, and fifth to finish this. I have it as a C, but I hope that the dollar will not go above this, because it will be a pretty catastrophe for EEM credit markets. So for now, we are stuck in this consolidation. We are tracking several counts. This one is actually bearish. So this one says we finished the consolidation here, and this is a 200 moving average, which was basically containing this rise, and dollar index was unable to go on the upside or on the downside. So we are basically capped. I think the first move to the downside or on the upside will be resolution. And this is a bearish count, which says we have a move down in 1. This is a big flat in 2. And now we're going to roll over in a leading diagonal, which is actually, so I think next few days will be the key. I think either we're going to break strongly lower or we're going to break strongly higher. The point is, from the Elliott wave perspective, we need to look at macro markets to really see. And I agree almost 90% with the gold count. But as you know, we have several counts on gold, which says that we are maybe an intermediate triangle. And this may be just a pullback down in an E wave. And we should go up to 1,450 in the next few months. So really tricky. It's kind of settling up for a big break in either direction. So I'm ready for both.
Let me just stop you there. I think that's the key here, guys. I want you to pay attention and monitor yourselves as this consolidation in the macro markets. If some of you are just individual stock traders, fine. You know, there's individual bull markets, as Kramer says, there's bull markets somewhere. And that's definitely the case in individual stocks. But these macro markets, the gold market, the dollar, I think crude is in a big consolidation. Bonds are starting to fall into consolidation. There's going to be a major macro move soon. And I'm just monitoring as a lot of people are just kind of saying, I don't know, including ourselves, which that's what a triangle does. That's what an Elliott wave triangle does, is just frustrates everyone right out of the market. I don't know when it's going to happen, but don't get too frustrated. There's going to be a big macro move. I would say in the next year, maybe 2 years, it will be amazing. And when FX gets moving, I mean, look at the euro drop in 2018. Look at the FX moves that happened over the last 15 years. This consolidation is very, very common in FX. And if the FX market's going to move, it will have big implications to the other asset classes, which are fixed income, equities, and commodities. So we have to watch FX. It's so key. Even if you are just the single stock trader looking for volatility, when this finally goes, it's been amazing. I've been through 2 major FX breakdowns, and the trading is amazing when it happens. So anyways, please continue, Alex.
This is euro dollar. We have a daily count here, and this one tracks. It's basically a mirror image of dollar index because of the dollar index. I think 54% it's euro. So it's basically mirroring the same type of structure. So here we have a 5 waves down, a nice triangle as well. And here we can be in the beginning of the huge downtrend in a move down in A, flat in second wave, so move down in 1, flat in 2. And this is really a key levels. I'm looking the zone from 113.50 to 115. If we start pushing through it, then definitely we're going to skip for a bullish count. Which says we might go in a flat. So it's so stuck and in the range that it gives you several possible scenarios in the Elliott wave world. So it also can be this. So I'm not disregarding both of these counts. Macro view, it's sliding slightly toward the bearish count, but this one is also from the Elliott wave perspective valid. So we have moved in 5 waves in A, up in A, down in B, and 5 waves up for C in flat. So both counts until we break some key levels are still on. Okay. So basically,
I might do like a straddle or strangle on an FXE in the options market. Just go long premium, and whatever way it breaks, we'll get paid. I think if you can go out far enough. Hey, just in the interest of time, give me one more quick, and then I want you to flip over to the cryptos. You want to talk about Aussie quickly?
No, I'm just saying that some of the counts we see in some commodity currencies is also portraying a possible run in US dollar. So here is kind of a 5 waves up and a complex corrective. If we break this channel to the upside, definitely we will switch to a bullish count. But until now, until we are contained in this channel, this can be just an ABC for an X, and we're going to move down to 0.69 in Aussie dollar, where it's going to be our big entry on the long side. So still on the flip of the coin, and we need, and I think we're going to see a resolution either this week or the next week on FX side.
Okay. All right, good. So, hey, flip over to cryptos if you could. Alex and Terry also put out a beautiful FX or crypto product. Happy to say, while the world was calling for the outright demise of Bitcoin, and I have to put myself in that camp, Alex and Terry got the low, and they got our customers long Bitcoin. What was the entry, around 3,500 or so, Alex?
No, actually, we missed this low by $20.
Right.
Yeah, that was the first.
And hold on, when he says he misses, the crypto and the Forex service is just like the stock service, where when we place a trade, we do it ahead of time. We say we are buying here, stop loss here. It's a definitive text message that goes out to everyone around the world. It goes in the trade desk. There's a timestamp. So when Alex is saying we did this and we did this, this is doing it in real time and putting trade alerts out. So please continue.
Okay, so we actually tracked this pretty well while the market was saying actually from here that the Bitcoin is going to go up from 6,000. We stayed bearish, and we basically was thinking that the first levels will be between 4.5 and 5,000. And then we used our Elliott wave methodology to pinpoint the low. We were long, but we missed our orders was $20 lower. Then we saw a 5 wave up and a very nice pullback in a flat. And then we got long here around 3,900, and we exited around 5,150 or something, I think. And I'm waiting here, actually, a resolution. I think this is a nice pullback here in wave 4 for green wave 3. So I think more upside it's going to be. But the first 5 waves on a larger degree, it's going to take time on cryptos. So I see here nice 1-2 development in green wave 3, long pullback in wave 4, and the blue wave 1 should be finished around June, July, August, where we can basically secure that the cryptos is going to go on a much higher levels in the future. So this is our actually weekly count. I'm going to clean it up for you. So we have a bullish count which says we might get pretty heat up here in the next few years. So if Bitcoin gets a 5 waves up.
Did you say keyed up?
What?
Never. I'm making a joke. Go ahead. Sorry to interrupt you.
Okay, so but look at this. I mean, we didn't invalidate the bearish count either.
Oh yeah. Okay. So above 5,500, 5,537, we can get it. Okay. All right. So all right. 5,537 is going to be the key, but the point is, in at 3,900, out at 53, using the wave count, real time trading. You missed the low by $20. Hell of a job, Alex. Very good job, Alex and Terry, both of you guys. All right, so guys, listen.
Yeah, we're actually starting to see Ripple take off this morning. We track all the major top 10 market cap cryptos, and we'll apply all the wave methodology. Bitcoin's kind of like the S&P is to the stocks. Give us the overall market conviction on Bitcoin, but we'll track the other cryptos. And looky there, we've been forecasting the consolidation and the support around the 31, 32 level here for Ripple. And this morning, one of your members here on the screen just said, "Look at it; it's taken off." I think it's Murat. He mentioned it, and I pulled it up, and lo and behold, there it goes. So we keep an eye on these, and
there she blows. All right, guys, you can tell my team is so fired up, so much to share with you guys. Don't give it all away. Come over to Trading Analysis and check it out. Great work, Alex and Terry. Alex, thanks so much, man. I appreciate it. We are going to Terry. Let's make a quick announcement. Alex, appreciate it, man. We'll catch you real soon. Okay.
Okay, no problem. See you.
See you, buddy. Great job. All right, let me just do this quickly. Let me do this. All right.
Yeah, one of the things we do for our members, can you hear me? Yeah.
Yes, perfect.
Yeah, one of the things we do for our members when we send out trade alerts, and we've been using SMS system for quite a long time, but as technology is improving, we're moving our new trade alerts to a push notification service. And in this push notification service, whenever Todd issues a trade alert, it'll come in. You'll get as long as you got the push notification sounds turned on in your mobile app, Android or Apple devices. These trade alerts will come in real time, almost instantaneously. And this is a big improvement. Our SMS service is kind of getting long in the tooth, and we've been having delays anywhere from 10 minutes to 2 hours sometimes before members get the trades. And in today's markets, everything is moving so fast. It'll be a lot more beneficial for our members for us to get the alerts out. We'll add more products to this app. We're just rolling it out this week now. So if you're a member at Trading Analysis, what you want to do is go into Google Play and do this on your phone and search for Trading Analysis, no space between it. Look for this right here. Now you will have to have a subscription. So if you're not a subscriber to Trading Analysis, this is not going to help you out. So join our service and then sign up, and you can get Todd's alerts in real time and execute them on your own platform.
Very good, very good. Yeah, we've been looking forward to that. Of course, it's available on obviously the iTunes, or not the App Store in Apple.
Yeah, you can get it on the Apple Store and also in Google Play.
I don't know if this is going to come through, but here's the app on my phone. So you just trading analysis and lights aside. Oops. No, that's not trading analysis. That's Turo. Have you guys ever used Turo? It works pretty well. Let me see if I can do this backwards. Trading analysis, and there you go. There's the member app coming.
Yeah, there you go. It's kind of not quite in focus.
That Turo app as a service analysis is pretty good. I was in Colorado for that Breckenridge technical analysis event, and for the same price that you just read a piece of crap from Avis, I got a Porsche Cayenne for like $80 a day.
Yeah.
It's pretty fun. There you go. Yeah. Thanks.
Yeah, right. There's mine.
Very good. Very good.
And it's just to push the button away, and then there's all the alerts. So
beautiful, beautiful. All right, let's just do a quick market check here. We'll send you on your way. Wish you good trading here. S&P's up a third. Nasdaq getting after it at 0.77%. Nasdaq. Big move out of technology here today. The RUT continues to lag up a third. Bonds off a touch. I guess call. There we go. I got that audio cleaned up there. Let's see. What is driving technology? My screens are not set up yet for trading on the day, but let's just take a look here real quick. Let me just pull things up here. At the end of a broadcast, your charts and quotes are
look at there, ExxonMobil, huh? Got that at the top of your list.
That's on portfolio watch list. So the sector spiders, no. Oh, interesting. Look at that. XTN, transports on the move, up 1%. Industrials, energy, technology, materials, discretion, S&P. Pretty good leaderboard up top there. XTN. Who is leading transports on the day? I'll show you guys how I use my Thinkorswim here. Okay. Transports on the day. CSX, United. Pretty good transports day there. Interesting. Airlines coming on. CSX on the move. Let's also just do a quick check on technology. We're going to go personal XLK. Qualcomm. Oh, because they're cleared with Apple, I think is the news, right? All litigation is going to come to an end. Earnings not till May 1st with Apple. Intel up 2%. Intel's a holding. Micron, AMAC, Xilinx. Well, I think it's pretty clear that chips are going. And that actually ties back, Terry. I've been saying this. I was on CNBC saying this. I'm like, why is China so strong? If you look at FXI, they did a double bottom at the end of 2018 as our markets were making new lows. Right here, double bottom from 18 to 19. China's breaking out, and Asia and EEM, which is half Asian equities represented in there, was a major source of the volatility in 2018. But here we go with China moving up. And just because so much semiconductors are produced in Asia, if you take a look at relationship of China and SMH, it's strong. SMH is breaking out. SMH looks extremely strong. In fact, we made a new high today. We're at new highs in the semiconductors.
Yes, we did.
Wow. That's pretty impressive right there. Same takeaway. This is why you're in a tricky market here, guys. You're into resistance. You do have a 5-wave move. As much as you'd want to buy the breakout, I don't think we're going to get through this rally from December of 18 unscathed and just continue to go up. I do think we're going to get a corrective setback. So do you have the patience to wait through that? Or are you going to be sucked into the emotion of a breakout above new highs? It's tricky up here. It's tricky. So for us, we're going to be patient. We're going to watch. We're going to see how this market interacts with these highs, see what happens with rates. I think Alex's analysis of the dollar in a very tight range is definitely going to have implications to what happens. So it's exciting, Terry. I'm almost sad to go away on vacay and leave you guys for a week. Or not.
Get out and get you some vitamin D. Get that suntan going.
I know. Look at you.
Just don't come back looking like a lobster.
No, but look at you compared to me. Boy, nice tone. All right. Hey, so guys, check us out at Trade Analysis. I hope you guys picked up a thing or two. Appreciate you guys joining us. We are located at tradinganalysis.com. You know how to find us on YouTube. So we have foreign exchange, we have crypto, we have stock and stock option analysis trading. We are the only company that is recommended by Elliott Wave International. Company has been in business for 4 decades. So also you've seen us on CNBC. Go over to the Trade Analysis. Check us out if you like. If you'd like more information, this is just once a week. If you don't, you'll have to wait for 2 weeks because there will be no Wednesday webinar next week. And we'll leave it there. Guys, leave a thumbs up. Leave a comment if you're watching here on YouTube. If you don't mind, just go over to this little thumbs up button right there. Hit that thumbs up. Throw a comment below. Let us know what you'd like to see on the show, things you like, things you don't like. And we're going to ramp the show up in 19. We're still just kind of slowly getting off the ground here. So a lot of progress. I was painting desks in the office. I was putting some polyurethane on top of our new desks. I was posting that on Instagram last night. So we're building out the office. A lot of fun stuff happening. So 19 will be enjoyable. Terry, thanks so much.
Well, thanks for having me on too, Todd.
Always. It's almost, I can't do it without you. So, all right, guys. Hey, thanks. Appreciate it. And we'll see y'all real soon. All right. Take care.
All right. Later.